When you are preparing to buy a home, the purchase price is only a part of the financial picture. Most buyers know they may need a down payment, but several other expenses can arise before, during, and shortly after closing. Some are required, some are optional, and others depend on the property or your loan or the terms you negotiate. Let's walk through them so you can be prepared without being surprised. Your down payment is the portion of the purchase price you pay instead of borrowing. The amount depends on your loan program. Some qualified buyers may be eligible for a zero down loan, while other programs may require 3 or 5 or even more percent down. A larger down payment may reduce your monthly payment and could reduce or eliminate mortgage insurance. However, putting down more money is not always the best choice if it leaves you without savings for emergencies. Your lender can help you compare your options. Earnest money is a good faith deposit submitted after your offer is accepted or as otherwise required by the contract. This is not usually an additional fee. If the purchase closes, the money is generally credited toward the amount you owe at closing. However, earnest money could be at risk if you fail to follow the contract or cancel for a reason that is not protected by one of your contingencies. That is why it's important to understand your deadlines and never assume that the earnest money is automatically refundable. A general home inspection is usually paid for soon after your offer is accepted. The inspector examines the home's visible and accessible systems and components, including the roof, electrical, plumbing and heating, and foundation, and other major areas. The inspection is not a guarantee that nothing will go wrong. Its purpose is to help you better understand the home's condition before moving forward. Payment is normally due when the inspection is performed, and you generally do not receive that money back if you decide not to purchase the home. Depending on the property, you may also choose or be required to obtain specialized inspections. These can include termite or wood destroying insect inspection, radon testing, mold evaluation, structural engineer evaluation, or other follow-up inspections. These are not needed for every home, but they may be worth considering when the general inspection identifies a concern. Many homes in Northeast Tennessee are not connected to public water or sewer systems. If a home has a private well, you may want the water quality, flow rate, or equipment tested. If it has a septic system, you may want the tank located, pumped, and inspected. You may also need to confirm the septic permit and the number of bedrooms the system is approved to serve. The buyer should be prepared for these inspection fees and the fact that they are often due before the inspection reports are provided to you. When you use a mortgage, the lender will normally require an appraisal. The appraiser provides an independent opinion of the property's value and helps the lender determine whether the home provides adequate security for the loan. The appraisal fee is often collected before closing. If the home does not appraise for the purchase price, the buyer and seller may renegotiate, the buyer may bring additional money, or the contract may provide another solution. An appraisal protects the lender's financial interest if it is not a substitute for a home inspection. Your lender may charge costs for processing and creating the mortgage. Depending on the lender and loan, these could include origination and underwriting fees, application and processing fees, credit report fees, tax service and flood determination fees, discount points, mortgage insurance, and discount points that are paid up front to lower your interest rate. 1 point generally equals 1% of loan amount. Paying points isn't optional in many cases, and whether it makes sense depends partly on how long you expect to own the home and keep the particular loan. Compare the interest rate, annual percentage rate, lender fees, and total cost, not simply the advertised rate. Also ask your lender what, if any, of these fees and charges can be rolled into the loan instead of paid at closing. A title company or closing attorney researches the property's ownership history and coordinates the transfer of the ownership. Related expenses may include title search and examination, settlement or closing fee, lender's title insurance, owner's title insurance, documentation preparation, recording fees, and government taxes and charges, courier, wiring, and electronic document fees. A lender's title policy protects the mortgage lender. An owner's title policy protects your ownership interest. They are not the same coverage. Some title and closing costs may be assigned by local custom or negotiated in the contract. Some of the money collected at closing is not technically a fee. It is money being paid in advance for future expenses. These costs may include the first year of homeowners insurance, prepaid interest from closing through the end of the month, property tax reserves, homeowners insurance reserves, mortgage insurance reserves, and when applicable, your lender may place part of this money into an escrow account. The lender will then use that account to pay certain taxes and insurance bills when they become due. Closing earlier or later in the month can affect the amount or prepaid interest collected. A new survey is not required in every transaction and is rare, but it may be recommended or required by the lender, title company, or circumstances surrounding the property. A survey can help identify things like your property boundaries, encroachments, easements, right-of-way, the location of buildings, and improvements. If the home belongs to a homeowners association or a condominium association or planned community, you may also encounter some extra fees. Also determine what the regular dues cover and whether the association is considering a major repair or assessment that could affect you after closing. Your written buyer agreement will explain how your real estate agent is compensated. The amount and method of compensation are negotiable. Depending on the transaction, the fee may be paid by the seller or listing brokerage, included in the concessions negotiated with the seller, or paid by the buyer, or handled through a combination of these methods. Any arrangement must be written into the appropriate agreements and comply with your lender's rules. We will explain the options before you sign an agreement or submit an offer so you understand whether you could have an out-of-pocket obligation. Your budget should not stop at the closing table. You may also need money for moving expenses, utility deposits, and connection fees, new locks or rekeying, immediate repairs, appliances, window coverings, lawn equipment, furniture, pest treatment, fuel for a propane or heating oil tank, your first HOA payment, routine maintenance. It's also wise to keep an emergency fund. Every home, even a well-maintained one, will eventually need repairs. You may be able to negotiate for the seller to pay or credit some of your allowable closing expenses. However, seller assistance is not guaranteed. The amount may be limited by your loan program, the appraisal value, and the terms the seller is willing to accept. A seller credit can also affect the strength of your offer. We will help you consider both the money you need and the overall competitiveness of your offer. Your lender will provide a loan estimate showing your projected loan terms, closing costs, and estimated cash before close. Before closing, you will receive a closing disclosure with the final figures. Review it carefully and compare it with your loan estimate. Your cash to close amount considers more than just your closing costs. Generally combines your down payment, loan and settlement costs, prepaid expenses, escrow reserves, and then subtracts credits such as your earnest money and any approved seller or lender credits. Never assume an online mortgage calculator includes every expense. Buying a home involves more than savings for a down payment. The good news is that these expenses can usually be estimated before you commit to a purchase. See the description section for a link to a great tool to help you estimate these costs. But keep in mind that you will need basic information about your loan, such as interest rate and loan type. That is why we always suggest contacting a lender before you even search for homes. Contact us if you need lender references. We will work with you and your lender to help you understand which costs apply to your situation, when each payment will be due, which expenses may be negotiable, how much money you should keep in reserve. The goal is not to simply help you reach a closing day. It is to help you become a homeowner without being financially blindsided the day after you receive the keys.